If you've been watching the markets lately, you know one thing for sure. Nothing looks the same anymore. The stock market has entered a phase of extreme volatility, and it's shaking even the most seasoned investors. What used to be considered safe, predictable investments are now anything but. Every day, we see sudden spikes, unexpected crashes, and headlines that make even the most confident investors pause. Investment. If you're not prepared, this new market will shock you in ways you can't anticipate. Right now, technology and AI stocks are stealing the spotlight. Investment. Companies that were just ideas a few years ago are now worth billions, sometimes overnight. Retail investors are flocking to these sectors, trying to ride the next big wave, while institutional investors are recalibrating their strategies to capture this growth. This isn't just a trend, it's a seismic shift in where money flows and how markets move. Investment. Everything you don't understand the sectors driving the market today. You're already a step behind. At the same time, traditional safe havens like bonds, gold, and cash are losing their appeal. Inflation, investment, interest rate fluctuations, and government policies are making these investments less reliable. What many considered insurance for their portfolios is no longer a guaranteed shield. Investment. Investors are being forced to reconsider everything they thought they knew about building a safe, stable portfolio. But here's the key takeaway: opportunity is still everywhere. Yes, the market is unpredictable. Yes, investment. It's volatile. But those who pay attention, who study trends, and who strategically manage their risk can still thrive. Timing is critical, research is essential, and discipline is non-negotiable. You don't have to predict every spike or crash. You just need to understand the forces driving the market and make informed, calculated moves. So if you're feeling nervous, that's natural. But don't let fear paralyze you. Learn, adapt, and position yourself to take advantage of the shocking changes happening right now. The new stock market is challenging, yes, but it's also full of potential for those willing to step up and act wisely. The stock market right now is more unpredictable than we've seen in decades, and understanding this volatility is crucial for any investor who wants to survive and even thrive in these conditions. Prices are swinging wildly, not just day to day, but often hour to hour, and the reasons aren't always obvious at first glance. It's no longer enough to look at a company's earnings report or long-term growth potential and assume the stock will behave predictably. Global events, investment, economic indicators, and shifts in investor sentiment are driving movements that can feel almost random if you're not paying close attention. Economic data that used to be a signal of stability, like employment numbers or inflation reports, can now cause massive swings. A report that slightly misses expectations can trigger sudden sell-offs, while better than expected numbers might push stocks to unexpected highs. Interest rate changes, government policies, and even international conflicts can create volatility almost overnight. In this environment, the market is essentially telling investors that nothing is guaranteed and everything is connected. Investor behavior itself is also amplifying volatility. Retail traders, fueled by social media platforms and instant access to trading apps, can now move the market in ways that weren't possible before. One viral post or trending stock can create a frenzy, pushing prices far beyond what fundamentals alone would justify. At the same time, institutional investors are reacting to these dynamics with lightning speed, rebalancing portfolios, and sometimes triggering cascading effects that ripple across markets worldwide. Understanding volatility doesn't mean predicting every spike or crash. It means recognizing that swings are the new normal and preparing accordingly. Risk management becomes the foundation of smart investing. This includes diversification, keeping a clear view of your cash flow, and knowing your personal risk tolerance. It also means being patient and avoiding emotional decisions. When the market jumps or drops sharply, panic or overconfidence can destroy gains faster than any economic downturn. The key takeaway is that this extreme volatility, while intimidating, is not necessarily a threat. It's a reality that can be navigated successfully. Investors who educate themselves, stay disciplined, investment, and maintain a long-term perspective can actually use these fluctuations to their advantage. Volatility creates opportunity for those who are prepared, and in a market that shocks everyone, good investment. The smartest investors are the ones who understand the game and play it strategically rather than reactively. Right now, the most striking force driving the stock market is the rapid growth in technology and AI-related sectors. Investment. These aren't just buzzwords, they're the engines powering some of the most dramatic gains we've seen in years. Companies in artificial intelligence, biotech, Green energy and cloud computing are not only attracting attention from big institutional investors, but are also drawing in a flood of retail investors eager to get a piece of the next big thing. This concentration of interest has created an entirely new dynamic in the market, where innovation and potential growth can outweigh traditional metrics like earnings or dividend history. The speed at which these sectors are evolving is almost unprecedented. A company that was considered a niche player just a year or two ago can suddenly become a dominant force in its industry, with its stock price reflecting that transformation in real time. Take AI, for example. Advances in machine learning, automation, and generative AI tools are reshaping multiple industries at once. Investors see the potential for enormous profits, and that excitement drives prices higher, sometimes faster than fundamentals alone would justify. This phenomenon isn't limited to AI. Biotech firms working on groundbreaking treatments, green energy companies innovating in renewable solutions, and cloud infrastructure providers scaling globally are all part of this growth narrative. Investment. These sectors are attracting massive capital because investors understand that they represent the future of business and technology. Traditional industries, by contrast, are growing more slowly, which makes these high growth areas even more appealing to those willing to accept higher risk for potentially higher reward. However, with this rapid growth comes heightened volatility, as stocks in these sectors can soar dramatically on promising news, only to fall sharply if results don't meet expectations or regulatory hurdles appear. It's a double-edged sword. Opportunity is enormous, but missteps can be punished just as quickly. Savvy investors recognize this and approach these markets with both excitement and caution. Research, trend analysis, and an understanding of the technology itself are crucial. You can't simply chase hype. You have to know what you're investing in and why it has long-term potential. Ultimately, technology and AI stocks are reshaping the market landscape. They are redefining what it means to invest successfully in today's world. For investors willing to educate themselves and strategically position their portfolios, these sectors present opportunities that were unimaginable just a few years ago. But for those who ignore the risks or follow the hype blindly, the market's rapid swings can be a harsh wake-up call. The key is to embrace innovation with knowledge, patience, and discipline. In today's market, the traditional safe haven investments that investors have relied on for decades are no longer providing the level of security they once did. Bonds, gold, and cash, the classic pillars of a conservative portfolio, are losing their edge in a world of low interest rates, rising inflation, and unprecedented global uncertainty. What was once considered a reliable way to protect your wealth is now increasingly vulnerable to erosion, forcing investors to rethink their strategies entirely. Take bonds, for example. For years, investment, government, and corporate bonds were seen as a safe place to park money, offering steady returns with minimal risk. Today, however, low yields and fluctuating interest rates mean that bonds may no longer keep pace with inflation. In some cases, the real return, the amount your money grows after accounting for inflation, is negative. Holding cash is facing a similar challenge. While liquidity is valuable, inflation eats away at the purchasing power of money sitting in a savings account. Even gold, historically a go-to asset in uncertain times, is experiencing unpredictable swings, with its value influenced by global market sentiment, central bank policies, and currency fluctuations. This shift is a wake-up call for investors who have relied too heavily on what used to be safe. It highlights the fact that the market is evolving, and strategies that worked in previous decades are not guaranteed to work today. Investors can no longer assume that simply diversifying across traditional assets is enough. Instead, a deeper understanding of risk, economic trends, and alternative investment opportunities is required. At the same time, this change presents an opportunity. The erosion of traditional safe havens pushes investors to explore new avenues for preserving and growing wealth. Diversification now goes beyond just mixing stocks and bonds. It involves considering alternative assets, emerging sectors, real estate, dividend-paying stocks, and even innovative technologies that are shaping the future economy. The key is to balance potential returns with risk management, ensuring that a portfolio is not overly exposed to any single factor, especially in an unpredictable market. Ultimately, the lesson is clear: what was once safe is no longer safe. Investors must adapt, stay informed, and be willing to reconsider old assumptions. By doing so, they can protect their wealth while positioning themselves to take advantage of the new opportunities the market offers. In an era where traditional hedges are losing reliability, knowledge, flexibility, and strategic thinking are the real safeguards that can help investors navigate this shifting landscape successfully. While the stock market may seem chaotic and unpredictable, it's important to remember that opportunity still exists for those who approach it strategically. The truth is, volatility and uncertainty can actually create the best conditions for investors who are disciplined, informed, and patient. While many people focus on fear and panic when prices swing dramatically, the reality is that timing, research, and calculated risk taking are what separate successful investors from the rest. Understanding this principle is key to thriving in today's market. Opportunities are everywhere if you know where to look. High growth sectors, underpriced assets, and emerging trends all offer potential for substantial gains, but identifying them requires careful analysis. This isn't about chasing hype or following the crowd blindly. It's about understanding which sectors have long-term potential, recognizing early signals of growth, and positioning your portfolio to benefit from these trends. Investors who take the time to study the market, understand company fundamentals, and monitor macroeconomic indicators are far more likely to capitalize on opportunities than those who rely on guesswork or speculation. Timing is another critical element. The new market environment rewards those who can make calculated moves at the right moment. Buying too early or too late can significantly affect returns. So it's essential to develop a strategy for entering and exiting positions based on both research and risk tolerance. This also means being willing to hold through short-term volatility when the long-term prospects are strong. Patience is not just a virtue, it's a practical tool for maximizing returns and minimizing unnecessary losses. Risk management is equally important. No opportunity is without risk, and understanding how much exposure you can handle is crucial. Diversifying across sectors, allocating resources based on your personal goals, and setting clear exit strategies are all ways to navigate the unpredictable nature of the market. In fact, the very unpredictability that scares many investors is what creates room for those who are disciplined and prepared to outperform the average market participant. Ultimately, the new stock market may shock many, but it rewards those who are proactive, strategic, and well-informed. Volatility, shifting trends, and emerging sectors aren't threats, they're signals. They tell investors where potential profits are hiding and highlight the areas where careful, calculated action can lead to significant growth. By approaching the market with a clear plan, a deep understanding of risk and reward, and a willingness to act decisively, investors can turn what seems like chaos into opportunity and come out ahead in this new financial landscape.